Hi guys, this is Vitaly with AFT Dispatch and A2C Logistics, and in today's video, we're actually going to talk about annualized cost of operating a truck to come down to a number so that we can understand why is it that so many owner-operators are not able to make money in today's market, under today's market conditions with today's operating costs. What could they be doing wrong? What could you do to make more money? And this is also going to be an update video to something that we had actually covered in a previous video a few months back where I showed you guys this spreadsheet. Now, I want to make sure you guys understand that this portion of the spreadsheet was last updated on November 30th, 2016. For example, this one was, May 22nd, 2017. And so it just kind of varies. Now, what I have done is I've updated the spreadsheet. Now, the information was correct in the previous one, but the difference was that we were not really approaching it correctly. We were trying to look for the break-even cost on a per mile basis of how much what's the minimum amount an owner operator needs to drive in order to be able to cover his operating costs, both fixed and variable. The problem is that they are fixed and variable. And generally, even if your dollar per mile remains the same, but you increase the mileage, what's going to actually happen is you're going to become more profitable because your fixed costs remain fixed. And we're going to jump into this in much more detail. And again, this video is going to be considerably longer than what you guys are used to. Today is 21st of January, 2024. We're well past 8 o'clock. It's about 8:30 in the evening right now. And I finished with the spreadsheet because it really was bothering me that I had to remove certain portions of the spreadsheet in that video. I had to remove certain data points. I had to use data that was outdated, that wasn't updated up to that point. So it really kind of bothered me, and the approach wasn't really correct in the first place. The numbers were correct, but this is a lot closer to the truth. Now, we might be off a little bit, but I'm going to jump in and show you guys. And again, if you have any questions, comments, anything at all, we're always, those are always welcome. We always welcome you in our channel in the comments section below. Drop us a line. If you want to discuss this, certainly give me a call or text me and we'll call you. Here's the thing. I would love to share this with you guys. The only problem is that I cannot seem to get it exported in such a way where all the editable sections are actually editable. So you can actually type in your information there and get the updated numbers. It becomes a fixed kind of a spreadsheet with whatever numbers that I pop in, which are not going to be useful to you. So the best way we can do this is simply give us a call, get in touch with us. Let's make an appointment, figure out your operating costs, get them plugged into the system, and then we'll jump in. The next thing that that I've actually updated here is this right here. This is the employee costs. This was last updated in 2015, and I updated it today. So what I did is there's no more loaded and unloaded empty miles or whatnot. I've gotten rid of that. So the driver is going to make 50 cents a mile based on the total amount of miles, going to bring in 66 grand. Now what we did is we came out to be 45,315 in net income for the driver because he's going to have some withholdings that you as an employer are going to withhold from his paycheck, being that this is a W-2 employee and not a 1099 contractor. Now, you will also have to do some employer contribution, or as often referred to as employer matching. So the thing you have to remember is here, we have a 5% Utah tax. Your state might be higher, your state might be lower. That will be different. Additionally, there's going to be a few things that are going to be a little bit different. So for example, your SUTA and FUTA, which is your federal and state unemployment tax fund that you have to pop into it, it only goes up to the first $7,000 of income. So it's not an unlimited number. And this is going to be a certain percentage. Then you have the state one, which is going to be up to $7,000 at a different percentage. Workman's comp calculation might be a little bit off. Basically, workman's comp breaks down your total income for the driver per every $100 of income. So if we have $66,000 over $100 of income, what we basically did is we have a difference of between $9 and about $13.50. So I took an average of that, which ended up being $11.26 per $100 of income. So you end up spending about $7,400 in unemployment insurance. Now, the state of Utah allows you to have a waiver. Other states do not. I'm going to go ahead and include it here. You can take it out. That's another $7,400 in your pocket. So you as an employer are going to pay, $10,518. And the employee out of the 66 grand will pay about $20,685 in taxes. Now, what I have done for the federal withholding at this income level, as a single filer, you're going to pay about 24% in the tax bracket. I have accounted for $14,600 of your standard deduction, reducing your taxable income. So I'm telling you, these numbers are very, very close and very, very clean. I've double checked, triple checked, and possibly quadruple checked this information. This is extremely important to me. I want to make sure that we get this across to you guys, and I will talk very quickly in order to make this video as short as possible. So let's jump in. Let's look at the variables. Here's what we got. We have a carrier. Let's say they're established, okay? But they got a brand new truck and a brand new trailer. The numbers, I looked them up. You can pick up a truck at today's rates, today's prices. finance it at today's rate, considering you have good credit, and you have a 10% down. Now, assuming you bought the new truck, you're going to have a 12% federal excise tax, FET, that's included in the price. You want to avoid the 12%, buy a used piece of equipment. But again, I'm not going to be able to go through in one video through all the variables and all the changes. So what I did is I kind of did the common thing. A lot of you guys bought brand new equipment. So in this case, we're assuming a brand new truck and a brand new trailer, which with finance costs, interest, and principal is going to be about $61,800 per year. So that's $5,150 per month. Truck and trailer insurance can be about 23 grand for the year, which is just under 2 grand, 1,920 bucks. Again, I get it. Some of you guys will have higher, some lower. It depends on the radius of operation, who your company is, your driver or what your experience is, your MVR, driving records, how new the company is. Some companies give you a 300-mile radius, 500-mile radius. In our case, we're looking at unlimited because it's an OTR company. So about $1,920. Again, it will vary. If you need to update this, we can go ahead and do this over the phone. So what I also did, and this is why I broke this down, this driver is going to put on 120,000 miles of loaded and about 10%, 12,000 miles empty. Now, the driver's going to get paid one way or another for all miles. For all intents and purposes, the driver's getting paid all miles. Now, why we did this is because we're assuming that this truck is going to get you 6 miles a gallon loaded and 7 miles a gallon empty. So that means that out of the 120,000 miles, he's going to burn 20,000 gallons of fuel. Went quite liberal with the cost based on today's expense of fuel. It's about $3.88 or so on average in the country. I know you can get it way cheaper than that. I know you can also get it way more expensive than that. I went ahead and averaged it at $3.95 for the empty. It doesn't change because the price remains exactly the same. You're just running more efficiently because you're running empty. Again, it will vary. My brother has gotten upwards of 11 miles a gallon. Sometimes, if you're driving in the right direction, you got some, wind behind you, you're on a flat surface somewhere in the Midwest and you're running empty, you're going to get fantastic fuel economy. Or you might be loaded at 48,000 pounds with a flatbed with something sticking out there going against the wind into the mountains. Obviously, your fuel economy is going to be bad. We got drivers that have cat motors, cat engines, great stuff, but not fuel efficient. Then you have other guys who have, Freightliners, they're getting routinely 7, 8, 9 miles a gallon. Again, huge difference in the total figures that we're going to be covering. But for our intents and purposes, we're going to average, and you're going to find yourself somewhere in between. Again, call us, text us, let us know. We can update these figures just for you. All right, so based on these numbers, 66 cents is going to be your per mile cost on just fuel if you're loaded, 56 cents if you're empty. You're going to spend $7,900 a month based on these figures per month. Loaded, another $677 in empty miles, okay, for diesel costs on a monthly basis. I was quite liberal once again on your empty miles. We are assuming that you're going to have empty deadhead and bobtail of total of 10% of total of the 120,000 miles, 12,000 in addition to that are going to be empty miles. And so I honestly feel like that's way too much. You should be somewhere between 5 and 7%, occasionally touching 10%, but never averaging that sort of number. You should be between 5 and 7%. Makes a huge difference, and we'll play with these things. But again, I'm just trying to present this at the very beginning before we jump in so everything starts to make sense. So what do we have? We have all our expenses, your SUDA and FUTA, we covered that. Workman's comp covered that. Your IFTA is going to be plus or minus $1,300 for the year. Again, will vary depending on where you go, where your fuel's burned, et cetera, where you purchased it, if taxes were paid at the pump there or elsewhere, whatnot. So about $108, $109 a month. Quarterly basis, you're looking at about $300 a month or per quarter that you're going to pay. There is going to be employer contribution, which is basically Social Security and Medicare. Over here, we looked at the SUDA and FUTA as well as workman's comp. The employee withholdings have been already, they're not showing up here. They're taken out here. This is the 20 grand that I talked to you about, but it carries over. We got the numbers here from the 66. The driver is going to walk away with $45,315. Now we got that. Your IRS 2290, your form is your heavy use tax, which is $550 for the year, about $45, $46 for the month. Now I'm assuming a 2.75% factoring fee. I'm assuming you're factoring your invoices. If you're not, you're going to save about $8,250 a year based on these figures. That's just under $700 a month. To be honest with you, over a year, just based on these figures, 1/4% will save you $750. You save 0.5%, $1,500 a year in your pocket. It all adds up. Next, we got phone and some additional external services, about $1,350, about $112 a month. Permits, $600 a year, about 50 bucks a month. You're probably not going to spend that much. Maintenance account, I want to break that down. I made it very, very simple. So your tires are going to be 6,400 bucks for the year. Hopefully not going through multiple sets and having to pay this multiple times. Your preventative maintenance, oil changes, things like that, brakes, lube, plus repairs, another 11,600. Now you got to remember, if you spend half of that or a third of that or whatever, the rest of it is income, we're going to just account for the 11,600. In total, it comes out to be $18,000. That's $1,500 a month. Maybe one month you don't spend that money. Maybe the next month you spend $3,000. Whatever it is, you have 18 grand a year set aside. Anything left over, that's income. So we'll account for that as well. We've looked at that. In total, you're looking at just under $110,000 in fixed costs. You're looking at just under $175,000 in variable costs. And in total, we're looking at a total of $284,591 in total fixed and variable costs based on 120,000 miles of loaded, 12,000 miles of unloaded, $300,000 in gross income earned in total. And that brings you to a loaded RPM or rate per mile of $250 per loaded mile. Okay, still with me? Again, questions, comments, anything, let us know in the comment section below and we'll jump in. So 20,000 gallons burned, 2,000 gallons burned, again, 10% difference. That's why the numbers are that way. Maybe your fuel economy is going to be better. Let's jump in. What do we have here? What we have here is we have the driver who's put on a ton of miles, driving, really strong driver, bringing in $66,000, walking away with 45 after taxes, your W-2 income. And you have to remember that at the end of this, you as a carrier will end up bringing in, paying down your equipment, covering all the expenses. You're still going to bring in $15,408 annually. So that's $1,284. Now, assuming that you actually include, let's say, half of this 11,600, because let's say you only spent half of that money on preventative maintenance and repairs, didn't have any major expenses, you add that in, and assuming that you also had the miscellaneous fee that I've set aside, of $3,000 of screw up income. Hey, we screwed up somewhere majorly for $3,000. 1% of your total gross income is accounted, which gives you a screw up fund of $250 a month. All right. Now, assuming we didn't screw up, you add that back in, that's another $3,000. So your total assumable income would actually be not 15,400, but 24,200. So you would jump from $1,284 to $2,017. Now, in a perfect world, that might work, but it's highly unlikely because, in some areas you're going to spend more, other areas, there's all sorts of stuff that pops up with all the DEF, and DPF and all the other variables that are out in the market. The rate might not be that high. All sorts of things might happen. So being on a safe side, we're going to say that you're, grossing $1,284 after all expenses have been paid. This is basically close to net income before taxes. Now, we're not going to jump into taxes. I'm not a tax professional. Talk to your CPA, your tax professional, your bookkeeper, your accountant, whatever. They're going to account for depreciation. They're going to account for interest. They're going to account for different percentages of different expenses. You have your days on the road where you can get that accounted for. Since you're an OTR driver, that's going to reduce your taxable income considerably. There's going to be other areas. Plus, it all depends on how you set up your company. A lot of you guys have LLCs. Some of your LLCs are taxed like C Corps, some of them are S Corps, some of them are C Corps and S Corps. Many of you guys, and I would say too many of you guys, are running as sole proprietors. Some of you guys are LLCs or LLPs, some are partnerships. There's a myriad of different ways of taxation and they make a huge difference. So talk to your tax professional, not me. All right, guys, so let's jump in. What do we got? We got 120,000 loaded miles, 300 grand. That gives you $250 a mile average. But here's the kicker. You're bringing in, I think that's decent money. $1,285. You're not driving nothing, but you have to look at it like this. Let's say you're the driver. Now, based on tax code, by IRS tax code, you're supposed to pay yourself a fair wage. What does that mean? That means that I would say the 66 grand, since you're going to pay that to a driver at 50 cents a mile, it's fair to pay that to yourself, right? So add that 66 grand if you're the driver, plus you have the remainder of this $15,000, 15,408 that you're going to include. So actually you're bringing in 81,408. Okay. But now let's go ahead and add a few of these other things. So for example, we were going to add this $3,000, right? And we're also going to add half of this 11,600, right? So we're going to divide that by half. So actually you're at 90 grand right there, right? Now, assuming that, these numbers change, and this is super important. So this is where the fixed and variable cost differential is. So the yellow ones are all variable costs and your fixed costs are in green. Okay. So if that kind of helps you a little bit. So here's what we're going to do. We're going to double each one of these numbers. So ultimately your rate per mile will remain at $250 per mile, but here's what's going to happen. 240,000. And then this is 600 $250,000. So still $250 a mile. But look what happens. You just jump to an income of 150 grand, where prior to that, you were at $15,000. So 10x, right? And why is that? The reason for that, I mean, your driver's making 11 grand a month. He's making a killing. Absolutely. Your taxes went up. All this other stuff went up. Your IFTA went up. The fixed costs remain exactly the same. And that's the entire point. Because while you're here, your fixed costs are 61.8 for your truck, and then 23 grand truck and trailer insurance. So in total, that's almost 85,000, $84,871 in just truck trailer payments and truck trailer insurance. Okay. We're not even talking about diesel, because that's a variable cost, right? So since your fixed cost remains exactly the same, if you increase the number, your loaded RPM remains at 250 per mile. Now, I'm not saying you're going to drive 240,000 loaded miles. My point is that if we double the numbers, your fixed costs remain the same. You go from 15 grand in profit to 151 grand in profit, right? And here, as a driver, you're not making $132,000 or 11 grand per month. You're actually making 294,000, because if you're the driver, you're adding that salary plus the additional 151 grand that will be passed through income, assuming that you have that type of a setup, like an S corp or an LLC that's taxed like an S corp. Up to $5 million, you still qualify. So there's a ways to go, and I would suggest that you guys take advantage of that after having spoken with and basically concluded that that's the right thing for you to do with your tax professional, not me. All right, so let's go back to the numbers. The point here is that you can be actually at, so let's say $2 a mile, right? So let's say you ended up doing 120 at $240,000, right? So that's $2 a mile. Look at that. You're actually losing $42,000. You're losing $42,000 a year. You're paying your driver, you're taking care of everybody, you're paying all the expenses, but you're losing $3,500 a month. Now let's do this. We multiply this by 2, so we get 240,000, and we jump here to 480,000. The rate remains at $2 a mile, but suddenly you're profitable now. Instead of losing 42 grand, you're making now 35 grand. So now you're making 2,900 bucks. And like I said, if you're the driver and you add in all these things, your potential carrier income after expense is 3,800, not 2,965. And then if you're the driver, you add in the salary, that's $178,000 at $2 a mile. So yes, you can make money. But if we go back again, here you are at $2, here you are at 250, you're still bringing in $15,000 a year. That's $1,284. And if you're the driver plus the 66, you're at 90 grand a year, taxable income, considerably more than a company driver, but very close, considering that a company driver would probably bring in about 66 grand. Is it worth all the headaches and hassles and all those things? That's up to you to decide. Maybe you're going to double a truck, get 3 trucks, 4 trucks, 5 trucks, grow your fleet. Obviously, then it really matters, because you as the only driver, there's only so much that you can do ultimately. But if you start to expand your fleet, the numbers start to really look good and work in your favor. Guys, I don't want to make this video too long. If you have any questions, comments, or concerns, please let us know. This was really bothering me. I wanted to make sure to get this across to you guys. The bottom line is that you can make money. Look at an annualized basis, then it starts to make sense. The previous video that we did, like I said, it's correct, but it wasn't the right approach, because we were looking at the bare minimums that we would have to drive. But the problem is that depending on the miles and those fluctuations, those numbers would change depending on the rate, because you have fixed and variable costs. Not the best approach. This is the right approach. Again, if you want to get this information, want me to send this to you, you call me, get this information in, and then what I can do is I can put it to a PDF and I can send it to you, and then that way you will have a break-even cost. But here's something that we're going to play with. Let's say you did 120,000 miles, but let's say you made 320 grand, right? Just 20 grand more. Suddenly you're at 267. That's 17 cents. Look what happened to your income. It just went from 15 grand to 34,000. It went from $1,284 to $2,888. Technically, if you add all this other stuff, you're actually not 34 but 43, and instead of 2,000 bucks, you're making $3,638. So again, the numbers can change. But imagine this. Let's say fuel dropped to, let's do this. Let's go back to 250 a mile. Okay. So now you're back to the 15 grand, and let's make fuel 350. Look what happens to the numbers. Boom, added 10 grand, right? So here you are at 395, and here we are, 45 cents less. You're at 350 per gallon, and boom, you're at $25,000 instead of 15. Let's say you're actually running 7 miles a gallon on here, and you're running 8 miles a gallon here. Look, suddenly you're at $35,000, right? So 25,000, because the loaded miles is the biggest one. So you just added 10 grand just on that, right? And that's a 350. Even if you were a 395, you would be at 27.5, which would be $2,300 a month. And if we just straight go back and come back to 6 miles a gallon loaded, 7 empty as we had initially, we're at 395 a gallon. You're bringing in 15,000 or 1,284. So 2295 is where you're at, right? 2295 minus 1284, you're bringing in an additional $1,011 extra from the same amount of work, but you're having either lower fuel or more higher efficiency. Assuming a 7 mile per gallon loaded, 8 mile per gallon empty, you're actually breaking six figures, $110,000. So 110,730 minus 90,208, you brought in an additional $20,500 just by simply having lower fuel cost. And again, if you have less breakdowns, if you find ways to get cheaper tires, you run in areas that are more fuel efficient, so they're not going to eat up as much fuel, less mountains, slow down, going down 62, 65 miles an hour instead of, hauling at 75, 80 miles an hour. That's going to burn a lot more fuel. Having, less empty miles, being the driver and paying yourself, not having this. I mean, look at it like this. Let's say you paid off this truck, you didn't have a truck payment. I'm going to zero this out. Boom. Now you're bringing in $152,000 with a paid off truck and trailer, and you're the driver. Say you're not the driver, you're paying your driver the same amount, you're still bringing in $77,000 off of that one truck just because you paid it off. All right. So 77 grand is $6,400 per month of income that truck is bringing you. You have a truck payment, suddenly that's, that money drops to $1,284. But again, your tax professional will figure out the depreciation, the interest paid, what percentage of what expense is considered deductible, what's not. You have your OTR days that you can write off if you are the driver. So there are so many different ways, and I certainly hope that you're not going to try to do these things yourself, and you will actually spend the money, hire a tax professional, keep track of all the stuff, because I promise you that the amount of money that they will save you, a good one that will save you, will be considerably more than their annual service fee. Additional things like payroll, things like that. Let's say you did this yourself. A lot of times they'll charge more than that. Some will charge less than that. Again, $300 is not in a year is not going to break the bank when you're talking about $62,000 truck payment, right? Truck and trailer payment for the year. Increasing your fuel economy, reducing costs will go from $79,000 down to $67,000 right there, just because you increased by 1 mile per gallon. So ultimately, guys, again, I don't want to make this too long, and I'm really hoping that this is going to be useful for you. But at the end of the day, guys, there are so many different things that you guys can do to help yourself make more money in this market. Part of that is running with dispatch. Again, if you have a strong dispatcher, they understand the markets, they understand how to price things. They're there in front of a computer, able to call in, tie up the lines, talk to their broker. They already have an idea of where the markets are, where they're going to move you around, what the right price is, and that's how they get you the better rates. It's just experience. That's it. While you're booking one load, hauling that load, finding a back haul, your next run, these guys have already probably by that point booked 30, 40 different loads, 50, 60 different loads. No replacement for that experience. So that's the truth right there. The other thing you have to consider is if you're a leased on owner operator, in many cases, a lot of the lease outfits out there for owner operators, they tell you one thing and then you get your weekly statement, and there's all kinds of other fees that they added on. I've seen statements. I've talked to drivers who have had carriers that they were leased under as a lease operator, and what they did is they inflated the cost of IFTA, or they had a per mile charge on all of their miles as part of an escrow that they never got back, but it was a lot, you know what I mean? So they pocketed that money. There was all sorts of auxiliary fees. They would charge them for factoring. They would charge them like IRPs that were inflated, and all sorts of different ways. And so a lot of times they'll get you a lower rate, or they promise you a lower rate, but you have to actually look at the effective rate. What are they, not just what they promised you, but what did it end up being? That's the thing about it. It's the same thing here. Look at it like this. Yeah, some of you guys might say, hey, I got 2% factoring. Hey, good for you. The problem is that you have to look at the effective rate. A lot of times they'll charge you invoice fees and ACH fees and wire fees and this and that and this and that, and then startup fees, and you have to include all the stuff. It doesn't matter if it's a couple $100, $300, $1,000. You have to include that in order to get to an actual number, because the truth is 2.75 is a good rate. 2.5, you can get that even in today's market with high costs on a dollar. That difference of 0.25% based on these numbers here will actually put $750 back in your pocket. Ultimately, that's $8,250 that you're giving to a factoring company in order to increase your cash flow. Now, is there a place for that? Absolutely, especially when you're new. But once you're able to wait on your invoices, you're going to be saving $8,200 a year that will remain in your pocket. So if we add that here, $90,208 plus another $8,250, so that's $98,500, give or take, that you're going to be up. And even if you don't have the driver, the total income will actually still come up because you're not paying a factor. Same thing with, other expenses. Like you're not going to spend $223 on some of these expenses because you're going to have a dispatcher who's dispatching. So there's no reason to have DAT and truck stop and, 1 to 3 load board or whatever you might be using. Maybe you didn't screw up and didn't spend that $3,000. Look, we just added another $3,000. Your IRP will generally reduce because the cost of your equipment is depreciating and becoming cheaper. So that will come down. Payroll costs might reduce. Your $2,290 is going to remain the same. Your truck payment can be reduced, refinanced, or paid off at some point. Your truck and trailer insurance can vary quite a bit depending on the drivers you hire, your records, how old your company is, what type of history it has, what are the loss runs. So all of that will change quite a bit. And again, there are different ways to do that. If you just increase this to, let's say you only made $325,000, 271, suddenly you're at 6 figures here and you're bringing in an additional $39,000. And if you save the additional money, you bring it up to 48, which you're not driving a truck, but the truck is still bringing you $4,000 a month. But we want to be realistic. We want to look at the numbers that we have today. $300,000 at 120,000 miles loaded, 250 a mile loaded, and an additional 12,000 miles of unpaid, not loaded, but with lower fuel consumption. You're still bringing in $81,000 if you're the driver. And I keep coming back to this because the majority of our drivers are their own drivers. Guys, questions, comments, let us know. I'm going to end it at that. Thank you so much for watching. If something doesn't make sense, please let us know. And if you do want to go through this, I cannot share it. And not that I don't want to, it's just it will not allow me to do this properly. All the formulas break. And if I can export it to you with your numbers plugged in a PDF, and that will be just as useful as long as we have your numbers. So without further ado, guys, thanks so much for your time. Please leave your comments in the comment section below. Make sure you smash the like button. And remember, if you have your own MC authority, you watched our videos, we can dispatch you. If you've got your own equipment, if you got a truck, whether you have a trailer or not, we can lease you on as a leased on owner operator. Super transparent program. Our dispatch service is a flat rate. There's nothing additional. The bottom line is that you don't have to work with crooked people, with crooks, with scammers, with fraudsters. Avoid those people at all costs. Work with people and companies that actually know what they're doing and they're honest and they've been in business for a long time. We've been in business for over a decade. All right. And we plan to continue remaining in business. The other thing is, many of you guys have met my assistant Alex recently. He's been calling through, saying hello to a lot of you guys, having good discussions. You guys can reach him as well. He's a wealth of information. Have questions about the leasing program? Get in touch with Kevin. He can get into all details about the leasing program. I'm also open book. My doors are open. You can text those numbers as well. You can go to our website at aftdispatch.com, fill out the form, whether you're a carrier, owner, operator. We'll get in touch with you. I want to leave every possible opportunity and possibility for you guys to get in touch with us so that if you're overpaying or you're under earning, we can fix that and nip it in the bud in 2024. Anyway, guys, thanks so much for your time. Make sure to smash the like button, subscribe to the channel, and I'll see you guys in the next one.